Hey everyone, welcome to Smart Investing. I'm Albert, host of the channel, and today this video is going to be about the banking services sector, also known as the banks. And the other related sector is the consumer lending sector. So we have 5 stocks here that we're going to be going over, and let's begin. So going down from the bottom of the list, and we're going to work our way to the top. So first stock that I have for you guys is FISI, Financial uh, Institution. I think that's the correct name. You can go ahead and verify. So right here, Financial Institutions. So as we can see here, we want to go over the first page. First page, we have a market cap of 376 million. 52-week high and low. Difference of about, you can say, let's round this off to 23. So about $11 or 11 and change. So with $11, that's, that's slightly above the 10. And again, that's not much of a range. That's not enough room for it to be considered a decent move. That's just like average. So we want something way above average. Uh, something even past 15, definitely. So again, I missed the mark. I would say like barely hitting, you know, over 10. So a minimum of 15 would be nice, like a start for a start. But again, it didn't reach it. So we're gonna look at the volume. Now for this market cap comparing to the volume, it's hard to say if this stock is active. And the thing is too is that so we have 15.34 outstanding shares and only 15 million available. So that would mean 340,000 minimum that the shares are acquired. Now, that's not a lot. So if you compare other stocks, the volume is much higher. But like I said, it's hard to say if it's active or not because the market cap is so low. So moving on from that, I'm gonna look at the PE. Show me it's very undervalued. Earnings per share is at 4. Dividend is at 1.16. Share price is at 24.54. So now we want to look at the chart. Let's look at the 5-year chart. Looks like it's on a downtrend. You can see here it went from an uptrend, and then right around March, or we can say April, that's when things just went downhill. You can see here, kind of stood flat a little bit from July all the way to October. So now, late October, that's when it sort of dropped again. The reason I say sort of is because it reached a new low, but it went for a minor uptrend, and then now it looks like it's trying to hold on to that range. But still, it's needing a long way up in order to make, ends meet. So overall, the stock has failed fundamentally. And, well, I wouldn't say completely failed, but needs a lot of work. And then as far as the technicals, it doesn't support it. The technicals have failed for this one. So we're going to move on to the quant ratings. highest rating for the quant was value, so 8.34. Want to look at the second one. So second one came in, the highest total was quality, 6.67. Sorry, 6.76. And then for overall rating, it was rated a 3 out of a 5. Now, we'll look at the company a little bit. Look at some financials and some fundamentals. So for the earnings, they've beaten their earnings, which is a good thing. But what I don't like is if we look at ever since the start of Q1, compared to 2021, these estimates have been lowered tremendously. So we're looking at about, let's say, maybe $1 gain, and then now we're doing like minus 20 cent result. It's slightly elevated in Q2, and it still beat those earnings. It lost that the Q3 estimate, and then Q4 was actually revised down, not too much or not too far away from the Q3 estimate. So I don't know, maybe that's like a 10 cent difference. But again, these estimates are going to keep going lower and lower. Excuse me, I apologize. Now for the annual, if it gives me anything, it's not giving me anything. So net income is at 77 million. Balance sheet 90%. Want to see if they have positive cash flow. So 20? There you have negative cash flow, and that would be just under 15 million for negative cash flow. And again, they can use the net income to cover that. Obviously, they don't have much of a choice. But other than that, you know, they want to have positive cash flow. So as for the dividends, they've been paying in the 20 cent range. I was trying to see where did they go wrong for the slow rates, because we have here going in 2020, they paid 26 cents, and then you can see here just 1 cent raise. But then in 2022, they gave a 2 cent raise, which is a little bit better. So for this stock, I'm going to say no. I'm not too crazy about it. It needs a lot of work. And the cash flow, needs a lot of work as well. So next one up is TRMK. For TRMK, so you could say at around October, that's when it actually broke to a new high. It's crazy to say that in a bear market. So it went from around 34 and change all the way to 37. It's not a big gain, but something is something. So we have here a volume of 599. Lately, it's been higher than its previous average for the last 3 months. So it's pretty much double of the volume for the last 3 months. And that 52-week high versus 52-week low, difference of 12. Could be better. Market cap is over 2 billion. Then we have earnings 2.14 and dividends at a 0.92. So for earnings, they still need work. And apparently they can cover the dividends, but we still want to look into that cash flow. And the other crazy thing is that even though they went to new highs, they're starting to pretty much go right back down, and I don't know what's gonna happen. Uh, it's just it's tough to look at companies that go up and then all of a sudden they go right back down. So anyhow, I'm gonna move on to the analysis. See what they have for that. So we have the highest rating is quality for 5.74. I'm actually kind of shocked. And then the momentum came in second for a rating of 5.44. Overall rating, they gave it a 2 out of 5. So we're going to look at this accordingly. Momentum, I can agree, has some momentum. I mean, it's double the average volume. And just the number alone for the volume, it's pretty active. Close to 600,000 trades in a day. That's pretty active. Now, for these estimates, they actually look like growth stocks. Well, for this one, I see that nice little curve slowly going up. And then also the estimates are getting higher as well. So for some reason, this stock seems to be working during this time period for some reason. Uh, Again, I can't say how, can't say why or anything, because I just don't know. It's something that has to be looked at and researched. I don't have that kind of time to just provide news, because I'm not a news channel or anything. So if you want to look at the company a little more and hear, good things about it, or just want to see what's what, and I guess you can follow a news channel just to say what they would say. And obviously, they're not gonna go over companies like these anyway. So, moving on to the net income for 2021, they received about 147 million. Now the balance sheet, not surprised, 90%. And now, pretty much all we're missing is that cash flow, and we want to see if they're positive or negative. So right away, so they are cash flow positive. So we have 970 minus 650, so 320 million. So we can see here the amount of total shares close to 61, and then the amount of shares afterwards that everything was bought up comes down to 55 million. So we're looking at least a 5 million share purchase from everyone, not just big investors and small investors as well. So for this stock, I'm gonna give it a blank. So I'd say hold off on it. So I mean, it's pretty even. What I don't like about it is that the 52-week high and low, it's not popular. And I don't know if this number's starting to be popular, but sucks to say, but the banking sector is not a sector that's chosen to gain new highs. They're just there, So hopefully they can do better, and we can look into this a little bit later on when they start to do better things for the company. So next one up is FFWM. FFWM, so we look at the 5-year downtrending, and then we have here, what is the latest for this? It's already at its 2020 high, which is a low for the year. by the way this stock looks, it looks like it's heading right to the 2020 lows. First page, looking at the numbers, they seem okay. Shares that are acquired, total shares that are acquired. So we're looking at about close to 6 million shares that are out there. I'm pretty sure that's the directors of the company and all that. Market cap is at 814 million. So stock is pretty active. As a dividend or income investment, not really. Share price is at 14 cents. They are beating their earnings expectations, as we can see here. But then we look at the debt, and not surprised, it's high at 90. So we have let's look at the annual. So the net income has been increasing as well. I wish it gave me information for the revenue, because that way I can tell if the company is pretty solid or not. So I just have to go with what the information gives me. So as for the balance sheet, it's going down 89%, 89.56 to be exact. So, I mean, something's something. Hopefully they get into that good rhythm as to paying down debt. Now we look at the meat and bones for the company for sure. So we have 96 million, then we have 16 million positive. So yep, this company is stacked on cash. But as far as the capital appreciation, doesn't bring much. So I'm gonna say no to FFWM. Next one up is FCCY. So FCCY, it just says First Constitution. So I don't know what that means. So earnings is at a 2.09, 52-week high and low. A difference of about 14. Now the volume, it says 0. That's pretty weird. It's really, really weird. So we have PE ratio is showing me that's fairly valued. 52-week high and low. Again, like I said, close to a $14 value. Market cap is at 286 million. So we look at the estimates and it's pretty mixed. And for the most part, it looks like it's slightly downtrending. Nothing crazy. And then 89% on their debt. And it looks about the same. So hopefully they can pay that off. So with the stock, let me see here real quick. So now we want to look at the cash flow. So, wow. They have close to 7 million in cash flow. So for this stock, First Constitution Bank, they have decent cash flow. And for that stock, I'm just gonna say hold off on it. They just need better earnings. Cash flow could improve slightly, so they just have some work to do, not a whole lot. Last one up is PB, Prosperity Bank Shares. So Prosperity Bank Shares, last stock that we're going over. Volume is at 362, pretty active. This is a $6.74 billion company. 52-week high and low, a nice range of about 17. So share price right now is at 73.81. Then we have dividend at 2.2. That's not bad. And then earnings could be slightly better. I mean, take it for what it is. It could be better, but it is what it is. Now, 5 year, it looks pretty flat. I don't really see. So like up and down, up and down, up and down. For the most part, it's gonna crash again. Just staying flat like that. So PE 13.2, dividend 2.2, and for this stock, we want to see analysis. So the highest rating for this stock was value. Second highest rating was actually quality. So value and quality. And then now we're gonna look at some things here. And so estimates have been raising, and this is 2022. Why would they raise unless they're having a monster year? So let's look at that. That should be in the 80s. That's what I thought. Because definitely, if this was like at least in the $500,000 ticket, I mean, that's just insane. But hey, to each their own. So dead asset is in the low 80s. That's nice. So now we just want to see the balance sheet. So I didn't post yet. So all we want to see is the cash flow. Leave that for last. So now cash flow to 3.23, 272. So that leaves it around 6. So yeah, they have plenty of cash flow. Plenty of cash flow. I think this company will survive. So I would say yes, keep them on your watch list. They're pretty strong. So I'm going to wrap things up. Thank you guys for watching. I hope you enjoyed the 5 stocks that I got for you. If not, then stay tuned for the shorter version. So I have 2 short versions that I need to do. I know people don't like the long versions. I like them. It's just enough and a lot of information to go by. So other than that, thank you guys for watching, and I'll see you guys in the next one.